Yeah, it's another big week internationally ahead of the Bank of England, set to deliver another hike in its cash rate, and also we've got the latest read on US inflation, which will be critical as far as the next move by the Fed is concerned. Let's get across it all. Pete McGuire joining us from XM. Pete, a very good Monday morning to you, and just gather that you have just chalked up a bit of a milestone there at XM.
Yes, good morning, Andrew. We certainly have. It's been a big year for us. We've built our headcount up from 620 to 960 globally, and we've sought license with the SEC. We're under the ban trading.com. I should point to the right one, trading.com in the US. And XM has just hit 10 million clients. So it's been a big year for us. The markets are on fire and trading more than 1.2 trillion US dollar value per month.
Yep, of course, as investors want that information, that's why they turn to the likes of you and also us here at Ausbiz.
Absolutely.
Yeah, it's a good synergy.
Well, you're a wonderful partner with us, Andrew. Yeah. We take that globally, and I mean that sincerely. You're at the top of your game.
Yep.
There's not any higher than Andrew Geoghegan on the radar.
You're very kind, Pete. All right, well, let's enough of that. Let's get into it then, what people actually want in terms of information. Yep. So I mentioned the Bank of England. Of course, we had central banks last week, our own, the Fed, the ECB. What's ahead then for the Bank of England, given inflation remains, what's still in double digits in the UK?
But it's certainly sticky, and we're looking at around about an 85% probability you'll see 25 basis points for the POMs to lift up. That'll be their 12th consecutive rise. We've had 11 consecutive, and if they hit that other one, another one this week, Andrew, that'll make it the magic dozen. So that gives us a picture of where we're heading in the UK. As far as the pound, I tell you what, it's had a really nice rally to the upside against the dollar, and it's been an almighty trade over the last month or two. So while the Aussie's done nothing, the pound's been on fire, and it's been a good trade.
All right. So that's for the UK now, Pete, and we just had that CPI chart there, but critically also we've got inflation out of the States. Of course, this is off the back of that higher than expected jobs report from the non-farm payrolls on Friday that we saw.
Yeah, better than expected, Andrew. I thought it was quite relatively a strong number, and that hit the ball out of the park with 253,000. So it was strong. Unemployment nudged down to 3.4%, so that must be nearly historically about as low as it goes. And this week's a big week for the States. So I'm looking forward to seeing what that CPI number hits. And then you've got core running at around about 5.6%. That's what we're tipping. So that's year on year, of course. So that's how the week rolls with US dollar index. It's coming under fire, gold, and of course, the volatility across energy markets.
Yeah, how are you looking? Gold's come off a little today. Oh, in fact, on Friday, it took a bit of a tumble off the back of that that report. It has been a favoured trade by so many. Do you still see the value in that at the moment, then, where it is?
Yeah, absolutely. I mean, it's whipsawing. We were at 2,072 last week. We're 49 cents short of the all-time record that was one of the days last week. It's given up a bit of that hot air. It's running at around about 2,025 this morning. So it's had a big pullback. It's volatile, and that really creates a lot of activity for traders because they just want to see movement. And when you're looking at central bank purchases, I just noticed something on the screen. China's appetite for gold and many nations, I mean, it's globally, is just voracious at the moment. So that's really creating, again, a hunger for gold, and that's being washed across naturally to the retail market, mums and dads all over the world, buying physical and, of course, paper.
All right. Japan, Bank of Japan, in fact, we can see the US dollar certainly appreciated against the yen. What's coming out of the BOJ at the moment?
Not a lot. I mean, Mr. Ueda, he was his first meeting in the last week or so out of Bank of Japan, and he's sitting on his hands a little bit. We've just got to see where it rolls over this quarter. I'm keeping a close focus naturally on inflation, and there's the chart there that tells the story. So it's they're well behind the curve as far as rate rises and where their rate policy is compared to the West or other countries in the West. So at the moment, I'm looking at the yen. It's volatile, just nearly that 135 handle. And again, it's been very volatile, whipsawing, and fantastic market for trading.
Pete, Energy. Of course,
Yeah.
that remains in close focus at the moment. That oil price did
Yeah.
receive a bit of a bounce, but of course has been under enormous pressure, particularly, I guess, with the prospect of weakening demand globally. Where are you seeing that at the moment?
Well, I think, Andrew, a couple of things. I spent a bit of time in April in Dubai and Qatar and spoke to a lot of oil and gas people, and they really wanted that 85. It's really, it's nearly written in stone for them, 85 to $90 a barrel as far as production. And they're getting well under that with WTI now at 71, and you got Brent just on 75. They were cratered, they were hit hard to the downside, and then they bounced Friday. So again, volatile. We're waiting to see as far as demand picture from China, the overall sentiment. And what worries me, Andrew, is that if they don't hit these sort of numbers, which they're not, are we going to see a big pullback as far as OPEC plus, as far as production cuts? So are we in for another round of that, maybe in June? And that's a worrying thought.
All right, let's round it out, Pete, with what's going on in the crypto market at the moment. Bitcoin, just hovering around 29,000 at this point.
Yeah, it's been electric. I mean, I think it's about 28.6 at the moment this morning, but it's volatile. And what it's gained in the last couple of months has been tremendous since Christmas. So yeah, it's hard to get way of a bull market, but any market that's up 100% since Christmas tells you something, that there's, or maybe 90%, that there's probably we're in a buying frame, looking at the BRIC nations, looking at commentary globally, and I think its best days are ahead of it. So let's just see where it rolls.